collateral-free loan limits for micro and small enterprises up to 20 lakh rupees, effective April 2026. Commerce Minister Piyush Goyal says Indian startups should go global as India now has mostly zero duty market access to nearly 70% of global GDP through multiple FTAs. And India's January retail inflation has now been reported at 2.75%. Hello everyone. You have tuned into SME Futures with me, Swalvi Vajpayee, and these are the top stories for this edition of SME This Week. Starting the bulletin with the big relief for India's micro and small businesses. The Reserve Bank of India has just announced that banks can now offer collateral-free loans up to 20 lakh rupees to micro and small enterprises, meaning businesses won't necessarily need to pledge property or assets to get credit. But here's the bigger headline. If an MSE unit has a good track record and a strong financial position, banks can extend this collateral-free limit even further up to 25 lakh rupees depending on the bank's internal policy. The RBI has also clarified that banks can still take credit guarantee scheme cover wherever applicable to reduce risk. And an important detail. If borrowers voluntarily pledge gold or silver as collateral, it will not be treated as a violation of collateral-free mandate. The RBI says the goal is simple: to strengthen last-mile credit delivery for small businesses that don't have big assets to mortgage. These revised rules will come into effect from April 1, 2026. Moving on. Union Commerce Minister Piyush Goyal is urging Indian startups, especially in medtech, to think global and take advantage of duty-free access and showcase Indian innovation on the world stage. This comes after he announced that India got market access to 70% of world's GDP, mostly at zero duty for Indian products. That's a game changer for exporters, startups, and the Make in India economy. Through 9 major free trade agreements signed over the last 3 years, India now has unlocked preferential trade into markets accounting for nearly 70% of global economic output, and in most cases, zero tariffs applied on Indian goods. This includes trade deals with big players like the European Union, UK, Australia, and New Zealand. That's a massive opening for Indian exporters from textiles and medicines to tech and farm products to sell made in India goods into Europe, America, Asia, and beyond with fewer trade barriers. And lastly, India's retail inflation for January 2026 has been released and the number is 2.75%. That's the latest reading using a brand new CPI base year of 2024, replacing the old 2012 base. Under the updated Consumer Price Index series, inflation in January stood at 2.75% year-on-year, with rural inflation at 2.73% and urban at 2.77%. This is the first official inflation figure calculated using the spending patterns and price weights from January 2023-2024 Household Consumption Survey, making the data more reflective of current consumer behavior. Food prices, a key component of the CPI, rose about 2.1%, while housing inflation was around 2.05% for the month. At 2.75%, headline inflation remains comfortably within the Reserve Bank of India's target tolerance band of 2 to 6%. That's all that we have on this edition of SME This Week. You stay tuned. I'll see you same time, same day next week.